Good morning, dear friends. We are discussing the deductions which are allowed under the Income Tax Act for computing the income under this head, means under this income from house property. So we have already covered deductions on account of municipal taxes which an SSC is required to pay. The deduction may be on account of the interest on the borrowed capital which the SSC might have taken for acquisition or for construction of his house. The interest portion may again be bifurcated between the pre-construction period interest that we just discussed, that it is allowed to be deducted in 5 equal installments, and the first installment is to be made in respect of the previous income in respect of the previous year in which the house is completed. We also discussed that the deductions on account of interest on income are allowed in respect of both the self-occupied property as well as in respect of rented property. It means if a person has a property which is self-occupied, which is occupied by him, the treatment is different, because in this case the deduction is 30,000 rupees, or it may be 1,50,000 rupees per annum, provided some conditions are satisfied. The basic condition is that the SSC should have constructed the house by borrowed capital after 1st April 1999, and the house should have been completed, the construction should have been completed within a period of 3 years from the end of the financial year in which the loan was taken. So the treatment was different. So these are some of the deductions. Now we will discuss one more deduction under this chapter, that is the unrealized rent. What exactly is the unrealized rent? Unrealized rent means a rent which the owner of the house is entitled to receive but he has not received it. It means this rent is receivable by the owner of the house but the tenant of the house has not paid it. In other words, we can say this is a lost rent. Means the rent which has been lost by the owner of the house. If that is the case, the deduction is allowed on account of the unrealized rent, provided some conditions must be fulfilled to avail of this deduction under the computation of income under income from house property. The number one condition which is required to be complied with is that the defaulting tenant, he should have vacated the premises, or the landlord has taken the steps to get him vacated. It means when the tenant has not paid the rent to the SSC, to the owner of the house, this deduction is allowed. I am just repeating it. This deduction is allowed when certain conditions are required. Conditions are fulfilled. First condition is that the defaulting tenant should have vacated the premises, or even if he has not vacated the premises, the landlord of the house should have taken the steps to get him vacated. Number two condition is the tenancy should be a bona fide tenancy. Number three, the defaulting tenant is not in a position of any other property of the SSC. It means he should not have taken any of the other properties of the SSC. I mean, that should not be in his position. Number four condition is that SSC, he has taken all the reasonable steps to institute legal proceedings against that defaulting tenant to recover his due amount. If all these conditions are fulfilled, then the deduction on account of unrealized rent is admissible under the Income Tax Act. So that is all about that unrealized rent. Now we will just discuss the various situations in respect of house property. There are different situations or categories under which the house property may be classified, and in respect of each of the category, the treatment is different. Basically, there are 7 situations under which the house property can be categorized. Number one situation is house property which is let out for the entire year. So this is one case when the house property is there and it has been let out by the owner of the house for the whole of the year. So it means this is the first situation. Second is the property has been let out for the part of the year, and for the rest of the year it was lying vacant. It means the intention is very clear. The house property is meant out for let out purpose, but it was let out for the part of the year, and for the rest of the year it was lying vacant. So this is second situation. Third category can be if house property is vacant for the full year. Means house property is there and it is meant for let out purpose, but it is vacant for the full year. Number 4 situation is the computation of annual value of self-occupied property. When a person is owning a property and this property is being occupied by the owner for his self-occupancy. So this is the 4th category. Next category is the house property which is self-occupied for the residential purposes but could not be occupied for the reasons of the employment at any other place. It means this property is meant for the owner to be occupied by him for self-occupancy, for self-residence, but he could not occupy it due to the reasons of the employment at any other place. That is the 5th situation. Next situation is SSC has more than one house in his possession and one of the house he is just occupying for residential purpose and the rest of the houses he is having for let out purpose. 7th category is residential property is let out for a part of the year and for a part of the means for the next part of the year it was occupied for self-residence purpose. Again there may be 2 situations, 2 possibility under this particular head. I'm just talking about the 7th situation means where the residential property is let out for a part of the year and for the rest of the year it was occupied for self-residence purpose. It means if you have got a house, bigger house, and that bigger house was given on rent, it was let out say for the first period of 8 months and for the rest 4 months means for the last 4 months you can say from November, December, January and February, February and March, last 4 months it was occupied by you for self-residence purpose. So this can be a case. That case will come under the last category. So we just try to discuss the various categories one by one. So taking out first 2 categories, house property which is let out for the entire year, and second situation is house property which is let out for the part of the year and was vacant for the rest of the year. In this case, the gross annual of the property shall be calculated in the same manner as we have discussed in our earlier discussions. For example, same method could be followed for both the cases. In the first case, it is let out for the entire year. It means what you will do, you will just see the municipal value, you will see the fair rental value, you will see the standard rent, you can say the standard value. So we'll just take higher of these two, compare this higher with standard rent, take lower of these two. Second step. Thirdly, you just compare this value, not compare, whatever value comes, you just give a deduction account of vacancy. If the house has been vacant for quite some period, you will have to give the leverage for that, and whatever value it comes, you just compare this value with the actual rent received or receivable by the owner. So the procedure is same, whether it is for a let out for the whole year or it is let out for the part of the year. So the procedure would be same. That will be followed by the 4 steps that we have already discussed in the earlier discussion. So first 2 situations shall be treated like that. We'll just calculate the annual value of the property by the same system. Next, third category comes is when the house property is vacant for the full year. It may be a situation when the house property is there, but it is vacant for the full year. In this case, please remember it, the gross annual value of the property shall be taken as nil. However, if municipal taxes have been paid by the owner of the house, these taxes would be deducted when it is 0. And for example, if an owner has paid municipal taxes, it means they will be allowed to be deducted. So the resultant, the net annual value of this property shall be in minus, negative. So it will hold a negative annual value. So this is the third category by which you can calculate the annual value of the property. So if municipal taxes have not been paid, then no deduction is allowed. If the municipal taxes have been paid, only then the municipal taxes would be allowed to be deducted. Since the gross annual value of the property is nil, the resultant net annual value of the property shall be in negative. Number 4 category. Here we are just discussing both the categories, number 4 and number 5 simultaneously. We'll just see what exactly was the number 4 category. Computation of annual value of one self-occupied property. Means when the owner of the house, owner has one house which is occupied by him for self-residence purpose. In this case, the annual value of the property shall be taken as nil. In the first case means when there is one house which is being occupied by the owner. So in this case, the value of the property, the annual value of the property shall be taken as nil, provided two conditions must be satisfied. Number 1 condition is that no part of the property is let out during whole or any part of the year. Number 2, no other benefit has been derived out of this property. In this case, if these two conditions are there, then the annual value shall be taken as nil. So, in the case of self-occupied property, the annual value is taken as nil. Please remember it. Next category is house property which is self-occupied for the residential purpose, but could not be occupied for the reasons of the employment at any other place. Means a person is holding a property, is owning a property for self-residence purpose, but he could not occupy it due to his employment being at some other place, so it was just vacant. In both these cases, the annual value of the property shall be taken as nil. Now another important point which is to be remembered by you is what about the municipal taxes? Because in both the cases, an assessee is required to pay the taxes, municipal taxes. Here he has paid the municipal taxes. For example, municipal taxes paid are say 5,000 rupees per annum. In the case of self-occupied property, any municipal taxes paid by the owner shall not be, I just repeat, shall not be allowed as a deduction from annual value. It means it cannot be nil on account of this. It cannot be negative on account of this. Means these municipal taxes shall not be allowed to be deducted from the annual value, even if he has paid some municipal taxes. So this is the major thing. This is very, very important and vital thing which is required to be remembered by you. Municipal taxes paid by the owner shall not be allowed as a deduction from the annual value. So it cannot be negative on account of this. However, if the owner has paid some interest on account of borrowed capital, then the deduction on account of interest shall be allowed. In this case, this property may be having the negative value, that we'll just discuss it later on. But this is very, very important. Municipal tax is paid by the owner of the house in respect of self-occupied property in both the cases, in both the situations. Number 1 situation was that which I discussed, the annual value of self-occupied property. Number 2, when the self-occupied property is there but it could not be occupied by the owner for the reasons of his being placed some other place by virtue of his employment there. So in both the cases, the annual value of the property shall be taken as a nil and no deduction on account of municipal taxes paid shall be allowed. The next situation is where an assessee has more than one house in his occupation for his residence purpose. It is possible that an assessee may be having more than one houses and one of the houses may be used by him for residential purpose and the other may be let out or may be vacant. That is there. So based on that, we'll have to calculate the annual value as we have discussed earlier. It means if he is having say 5 houses, one of the houses is just using it for self-residence purpose. So the treatment in respect of self-residence purpose would be like self-residence, as I just discussed. The annual value of this value shall be taken as nil, and if he has paid any municipal taxes or municipal taxes have been paid, any municipal taxes have been paid by him, then no deduction would be allowed. For the rest of the 4 houses, the procedure is the computation or the way of computation of the annual value is just similar as we have just discussed earlier in our various examples. So this is the 6th situation. The 7th situation may be, last situation may be, the residential property which is let out for a part of the year, and for the part of the year it was occupied for the self-residence purpose. It means for a part of the year it is let out, and for a part of the year it is used by the SSC, by the owner of the house for self-residence purpose. That can be situation. Again, this situation can be bifurcated into 2 possibilities. There will be 2 possibilities which may fall under this category. The first possibility can be the house is partly let out and partly self-occupied. That can be a case because a person may be having a bigger house, a part of the house occupied by him for self-residence purpose, and the part of the house is let out on rent. Means it is possible, for example, a person has 2-storied house, ground floor is being occupied by him, and the first floor is let out on rent. So this is the first possibility. The second is partly let out for the period and partly self-occupied for the remaining period. This is also possible that a person is having a house and for a particular period it has been let out, and for the rest of the period it is being occupied by him for his self-residence purpose. So it means 2 possibilities may fall under this category of residential property which is let out for a part of the year, and for the part of the year it was occupied for self-residence purpose. We will just discuss this particular situation in detail in our next lecture, and we will just discuss it with some examples. Thank you very much.